Well, hello everybody, Michael Silva here. Quite the uneventful day in the stock market today. If you're looking over here at where these index products close, however, there was opportunities if you were watching intraday and if you watched yesterday's stock market brief show. Now, in today's episode, we're going to look for some more opportunities, keeping it a lot shorter and compact in today's video. If you're new here, welcome to the show. Monday through Friday, we use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. If you haven't done so already, make sure to hit that thumbs up and subscribe if you like this type of content. Overall, when I take a look at the 11 sectors today, you can see down towards the bottom are more risk-off assets, right? Consumer staples got hit hard. Stocks like Hershey, HSY got completely crushed on big volume. And then you have utilities down there, a whopping 1.48% to the downside. Overall, you can see rather unchanged across the Dow, the S&P 500, the Nasdaq, and small caps there too as well. Okay, so what took place? Well, the dollar was up slightly today, so that negative correlation kind of is holding as it stands. Now, one thing that I like to look at when I look at the dollar is also gold, because there is a strong negative correlation there. When dollar goes up, gold typically goes down, and gold was, well, down on the day. However, I just want to take a look at this price action. We had a hammer candle today, okay? And the hammer candle could indicate a potential reversal. Now, I want to call this out because markets, they move between expansion and contraction. And as we're standing right now, the market in gold, at least, is contracting. So that means we could potentially see a pretty explosive move here in the near future. Now, we undercut this low right here, which kind of invalidates this, sometimes you get undercuts and boom, we can buy back through or do what I call the U-turn trade. And that would be a breakout of this rising wedge. So that could be an opportunity to look for, but you really want to see strength come back in before hopping into something like this. Now, if we're paying close attention to the dollar and the dollar starts breaking down, maybe people might look at this and be like, hey, it's flagging right here. And boom, it starts heading back down to this, the 100 level. Perhaps that gives us the breakout to the prior swing high over here in gold. So that's going to be something to pay attention to in the near future. Let's take a look at the S&P 500. So this was yesterday's chart we had shared, and we had that gap down where? Right to that 5-day moving average, and that 5-day moving average was tagged once. It was tagged twice, and it was tagged 3 times, offering up 3 opportunities to potentially buy the dip to play it to the upside. That's what we discussed on yesterday's market brief. We also talked about that 2-day anchored VWAP. As price pulls back into this area, it did not tag the lower daily expected move or the upper daily expected move, but it closed, like I said, unchanged. Remember, 68% of the time closes, if you think of this as a bell curve, closes within those daily expected moves. And we have yet to hit the weekly expected move there too as well. I'm going to give you an updated chart showing the new daily expected move levels. So going into tomorrow's trading day, if we get some strong momentum to the upside, that can bring us to the upper daily, which happens to confluence with the upper weekly expected move. Remember, 68% of the time. So if it gets outside of these areas, well, you might want to be a little bit more careful, especially if it gets up there like this, a big strong move. You can typically see pullbacks back into this, but you could also see strong moves could potentially pull back and act as a level of support, and that's where things could really start to fire off to the upside there too. So that was what we'll be watching going into Thursday. Another thing to pay attention to, if you look at price action, this could be a potential head and shoulders pattern, but the bulls remain in the short-term control because we're above that 5-day moving average. Now, I want to remind you, what did we say all throughout this area? We said it's declining, right? So declining, right? It moves through 4 stages. It goes markup. Well, it goes through accumulation, which is sideways, markup, distribution, and then goes back down to decline. Then we say is what? It goes into stage 1, which is what? That is the accumulation portion, okay? So now, as long as we can stay above this level, this is going to start to turn up as the days progress. That means we can potentially move into a markup phase, stage 2, which can really get this thing going more to the upside. However, if we start breaking down, say the week-to-date anchored VWAP, right? That's also in confluence with the lower daily and the 5-day. So if we pull back here, there can still be good opportunities to potentially play it back up. But if we start getting down through these levels and we start breaking down the month-to-date, right? That would be a pretty dramatic move to the downside. That right there, the 5-day moving average would start to curl back over, right? And this could just be a temporary, boom, move before we start to decline further, okay? That is not necessarily the base case right here, and the reason why is because, well, we're still holding it. So we're bullish really until that changes. Okay, we're going to look at the Nasdaq 100 now. This was yesterday's chart, right? Take a look. Where did price open up right out of the gate? It opened up on yesterday's, or the 2-day anchored VWAP, we'll call it. And then that was also right in confluence with the 5-day moving average. That's what created the opportunity here out of the gates, where we saw a nice move up to the upside, and we almost came in and tagged that upper daily expected move from today, but we didn't quite reach it. We didn't tag the lower, we didn't tag the upper, but we did close, obviously, within it. Remember, 68% of the time. You can see we pulled back. We had some news out. I believe it was on NVIDIA. I didn't quite catch it, but we saw a big hit down. And where was that to? That 2-day anchored VWAP held again, and the 5-day moving average. 5-day moving average, 2-day anchored VWAP again had a little bit of a pop into close. So we're going to update this chart. Then we're going to map out some key levels on a longer term chart, because I think that there is opportunity here still from the long perspective if we clear some of these levels. So going into tomorrow, our daily expected move is 367.59 to the upside, 361.49 to the downside. Okay, so if price breaks down from the 5-day moving average, very similar to what we said here, right? That would be bearish until we recapture it. You can see breakdowns. Oh, we come touch the the lower daily expected move, but maybe it turns around. We can buy back through that, right? The U-turn trade. You also want to pay attention to potentially this also being that head and shoulders pattern. So the bulls really need to step it up here going into tomorrow's trading session. Now, I want to show you this chart. This is the hourly time frame. I shared this with my Patreon group earlier in the trading session, and I wanted to just call out these little arrows on the screen, right? They're pointing to prior resistance, prior resistance, prior resistance, prior resistance, and we broke through it 2 times. But look, as we broke out through this today, right? This is the little swing low right here. So we can see we held, right? And boom, we came back up. We got outside of it, but then we started closing back in. So this level over here looks like a pretty strong area of resistance that you want to just be aware of, that 364.88. So it'd be nice to see if you're bullish an hourly close above that. Boom. So we can start to head back up to 366.36. And that, we got clearly an area of resistance today. You can see it was a resistance here. It was resistance here, and it also was support right there. You can see price got a little bit above that, and we have that gap right above us there too as well. So when I look at this, as we pulled down today, like so, you can potentially look at this as a head and this as a shoulder. And this right here potentially is an early neckline break or the longer term neckline break. And if we can get above that and hold that, if this is just kind of flagging out here, that could get us to the upper weekly expected move by tomorrow, by Friday potentially, right? We still have, two trading days left in the week, and 369.85 as we're moving into month-end, quarter-end markup is very, very doable. So we need to be aware that that's a possibility. But that doesn't mean just YOLO into it and hope it gets up there. You want to manage risk as time progresses. So if we get down beneath these levels, okay, be bearish until we reclaim them. And if we don't reclaim them, well, okay, then just pause and wait for price action to start to consolidate or start to do something a little bit more constructive. Wait for positive divergences, right? We had a negative divergence today, right? So you can see that expanded on yesterday. We had a high right here, higher high. We had a high, lower high, and then price started to move back down. So it worked itself off right over here while we had that news drop. So there's a lot of different ways you can approach this. As it stands right now, bulls are in control. However, that bullish trend on the very short term is neutral. If you zoom it out, once again, we can be potentially seeing a inverse head and shoulders forming on the hourly time frame. That's all I got for you on today's episode, everybody. See you later.